Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So if you look at it in April, I'll go through one by one. The euro, what it was expecting there in April was if the euro weakened, it would weaken in a volatile way, and that's exactly what happened actually. The yen really didn't do much at all, and that's the second pane or the second chart. If you look at the British pound, it had the similar characteristic as the euro, making you see that downward slope, meaning that the option traders were saying if the pound weakened, it might weaken in a very volatile fashion, and it did. And if you look at the Canadian dollar, the last chart, it's the reverse view. It's basically saying that, well, it's not the reverse view. I should say it's just that it's the base currency. So in both the euro, the pound, and the Canadian dollar, the option traders are more concerned with extreme dollar strength versus dollar weakness. So what he's saying is that, at least according to the option traders, that the dollar back in April might weaken. In fact, actually, that's probably the prediction of slow move down in the dollar. But if it moved fast, it would be in a rally, and that's what did happen. So these few charts are very, very powerful. And I took a screenshot as of this morning. You'll see that we see a shift in the pound. It's more of a symmetrical look now. It's saying that the dollar might actually rally or sell off in a volatile fashion now. The Canadian dollar is about the same the way it looks. The euro is more of a lot like the pound, is that it's more of a symmetrical look now. That if the euro rallies, it might rally in a volatile way. But the British pound is still showing that it's sort of predicting that the dollar should weaken, but if the dollar strengthens, the dollar would strengthen in a more volatile fashion. These few charts really don't predict actual direction. They help you understand how volatile the expected variance, I should say, might be in the future. So here's the, let's say, yen, the downward slope. Swiss franc is more like the pound. And the euro, Brazilian real is saying that if it's going to get volatile, it would be, when you see that upward slope and it's dollar-based, it's predicting that the dollar would actually strengthen in a significant way if it does, that would be the more volatile way that we see increased volatility as the dollar strengthens. And lastly, pretty similar situation with the peso, that the peso might rally in a slow way, but it might weaken in a big way. And that's the way I view those Q charts. And again, you could look at, please, go to FX Options each and every morning, or you can go at the end of the presentation and learn more about the skewness. Just to summarize what I spent the last 50 minutes on, using options to take advantage of the currency market moves, or hedging currency exposure does not have to be overly complicated. With increased globalization, foreign exchange markets are playing a much larger role for investors. The FX options market allows investors to target various objectives such as income, limited risk, hedging currency exposure. FX options allow traders to participate in the currency markets without having to open a spot account or a futures account. All of the option strategies are available in the equity options market are available in the FX except the covered call strategy. Again, I could not recommend enough to you to go bookmark FX options. Yes, you're participating in an ISE webinar, and I think hopefully you found it valuable today. Please put it in the survey. I hope that you found it valuable. But not only that, we have trade alerts. I quite frankly think the best part is the skew charts. Once you understand how the skew charts work, I think you're going to find that this is a very, very valuable tool for anyone that not only trade in the currency markets, but all the markets. Because if you're trading commodities, commodity markets or commodity ETFs, even equities that are commodity-based or that have predominantly, commodity-based businesses, you're going to want to know what's happening in Canada. You're going to want to know what's happening in Australia, and the skew charts can help you. So again, I would go and click on skew charts. There's an article that I wrote, Learning to Trade with or Against Skew. I would urge you to read that. And you could always go into the trader forum and ask me a question. The events calendar is there. We have the trading tools, which we're going to add more and more tools. So I think this is, quite frankly, I think it's one of the best sites out there for FX options. It might be the best. We spend a lot of time on this, and again, it's worth the price, free. We don't charge anything for any of these tools. So again, please bookmark it and use it. Hopefully it'll help you in your portfolio, whether you're hedging or you're trading with your own view. At this point, I want to thank the Boston group because the Boston group actually reached out to me, an AAI group, and asked me to present this webinar. But I wanted to open it to everyone. So the group was listening, and thank you. I know there are many, many folks there. You guys are all together, but everybody else is sort of listening separately. And I hope you have some questions. I know there are a couple of questions. I saw a couple. Let me see if I can get them. And please type in any questions that you might have. First question is there a typical average holding period for an FX option? I don't know about an average holding period. What I would say is that this is not, the FX option is not for someone that wants to trade in and out in 3 seconds or even 3 minutes. That's the better market for that is probably the spot market. This is more for someone that's looking to make a trade today and maybe sell out later in the week or even hold it for weeks or even months. So the options, I think, are a more longer-term vehicle relative to the spot market or even the futures market. So I think options are a great product once you understand the risk-reward trade-offs that are involved with them. What type of investor, trader? I think they're suitable for people that are, again, looking for their own unique risk-reward trade-off, whether it's a spread or you want the limited risk, and maybe you want to trade, you want to have a view of a certain currency pair. You don't want to be worried about every night's overnight action, so you can trade an option and have limited risk. Do we plan on any leveraged FX ETFs? Not in the near future, meaning not in the next couple months, but we're always looking at new products. So you never know, but right now we're just concentrating on building out the FX options site, trying to create more tools. As Mary pointed out, we've attracted more interested traders, probably from the site, now starting to trade. And what happens is it's a very strange phenomena. As we get more people interested, meaning that they just put bids and offers in each and every day, week, or month, market makers, when they start to run into these orders, they can't see them really. When they start to run into them, they actually start to tighten their bid-ask spreads in most times. And so that a little bit of volume creates more and more volume, Mary. So that might be what happened over the last couple months. But again, we can't guarantee the ultimate liquidity. But yes, thanks. She says the spreads have tightened up too, yes. Andrew wants to know, why is Canada so different? How so? Andrew, please just type that. I don't know if it's different or not. Oh, Mary, thank you very much. Very kind comments. Thank you.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.